Have you ever wondered how to make your money work for you? Well, today we're diving into the world of investing. Investing, in essence, is not a get-rich-quick scheme, but a method to build wealth over time. It offers a way to set your hard-earned money to work in a variety of assets, such as stocks, bonds, real estate, and mutual funds. Each of these investment types comes with its own set of risks and rewards, and understanding them is crucial to making informed decisions. Stocks, for instance, might promise high returns, but also carry high risks. Bonds, on the other hand, are considered safer, but offer lower returns. Real estate and mutual funds present different opportunities and challenges. Investing isn't just for the rich, it's an essential strategy for anyone looking to grow their wealth over the long term. Now, let's talk about risk. Investing involves risk, but don't let that scare you off. You see, the idea of risk tolerance is a personal one, and it varies from person to person. It's about understanding how much risk you're comfortable with. Are you the type who likes to play it safe, or do you enjoy a bit of a thrill? Now imagine walking on a tightrope. Pretty risky, right? But what if you had a safety net below? That's where diversification comes in. By spreading your investments across a variety of assets, you're essentially creating a safety net. If one investment falls, others may still hold strong, cushioning the blow. In essence, diversification is about not putting all your eggs in one basket. It's a key strategy in managing investment risk and getting the most out of your money. Remember, diversification isn't about making quick gains, but about limiting your exposure to risk. You may be wondering, how do I get started with investing? Good news! It's not as complicated as it may seem. The first step is to set clear financial goals. Are you saving for a rainy day, a down payment on a home, or perhaps retirement? Having a clear goal can help guide your investment strategy. Now let's talk about where to invest. The most common place to start is with an investment account. This could be a brokerage account, a retirement account like an IRA or 401k, or even a robo-advisor. Each has its own advantages, so it's important to research and choose the one that aligns with your goals and comfort level. Next comes the question of what to invest in. Stocks, bonds, mutual funds, real estate. The options can seem endless. Consider your financial goals and risk tolerance when making this decision. If you're just starting out, it might make sense to start with a broad, diversified mutual fund or exchange-traded fund. Creating a diversified portfolio is essential. This means spreading your investments across different types of assets to limit your risk. Remember, don't put all your eggs in one basket. By investing in a variety of assets, you can weather the ups and downs of the market with a bit more stability. Another key point is to start investing as early as possible. The power of compound interest is truly magical. The sooner you start, the more time your money has to grow. Even if you can only invest a small amount each month, the important thing is to start and make investing a habit. Lastly, don't forget to periodically review your investment strategy. As your life changes, so too might your financial goals and risk tolerance. Make sure your investments continue to align with your financial objectives. Starting to invest might feel overwhelming, but with a little knowledge and planning, you can set yourself on the path to financial success. So, are you ready to take your first steps as an investor? We've covered a lot today. We've unearthed the importance of investing, how it's not just about storing your money away, but actively engaging it in different assets to grow your wealth over time. We've navigated the broad spectrum of investments, from stocks and bonds to mutual funds and real estate, and learned that each comes with its own set of rewards and risks. We've also learned about the critical concept of risk tolerance and how understanding your own can guide you in making informed investment decisions. Diversification, we found, is a potent strategy to mitigate risk, spreading your investments across various assets to cushion potential blows. And, whether you have a little or a lot to invest, we've discussed how to dive into the investing world and start building a diversified portfolio. Remember, the journey to financial independence starts with a single step, so why not take that step today?